Hey, welcome. Brett, welcome.
Thank you so much.
So we should say, full disclosure, I recently wrote a book about FTX. I interviewed you for that book. We didn't plan this. We were randomly assigned by Benzinga, not randomly, but. So Brett, obviously, elephant in the room. Let's talk about FTX. Your view, obviously, you were president of FTX US. You left, I believe, about 3 months before the bankruptcy in November of 2022. What's your perspective on what's happened? Talk a little bit about your involvement.
Sure. I mean, just to start off, the entire event with FTX was obviously an incredible tragedy, just from start to finish. I think, obviously, I'm sure people here have been following along with the trial of Sam Bankman-Fried and its conclusion. And the whole event was sad, although I think that the result was just and correct. I've known Sam Bankman-Fried for a very long time. I first met him when he was an intern at Jane Street Capital, actually in this very building. I don't know if people know that, but Jane Street's offices are 250 Vesey in Brookfield Place. So we are here where I first met Sam Bankman-Fried. And I've known him for a long time, and I sort of saw like the deterioration of his personality over the course of that decade, and learned that he had sort of a combination of personality traits that made him not just impossible to work with, but a real danger to others. And ultimately that this result, it's not just important for him to be held accountable for his actions, which finally he is, but also that he can be put out of harm's way, that we can stop, harming other people, which I think he would have absolutely continued to do if he would have been allowed to continue running this business. So I think ultimately this is the right result. I think it's important now to take a big step back, that we have closure on that event, and think about what really happened and where we can be moving forward. And I know this has been said many times, and it's also been said by the prosecutors in the case against Sam Bankman-Fried, but this whole case here was such a kind of cut and dry instance of financial fraud that really had nothing to do with blockchain or digital assets. I mean, if you think about what happened with, MF Global, it basically it was the exact same shape as FTX, where, he misappropriated customer funds, he took risky bets, he lost customer assets, and then lied about it and tried to, manufacture financial statements to cover up his crimes. And that is sort of a fraud that's basically the oldest one in the book. Unfortunately, it's sort of a story about human greed and hubris, and probably will continue to happen, probably the same rate that it continues to happen now. But I think it's great that the right result ultimately happened here, and that we can hopefully move on as an industry from him and from the whole event.
Yeah, we're going to move on in just a minute, but I want to ask a couple of follow-up questions. First, this idea you said that if he hadn't been convicted, he would continue to harm people. That's a pretty stinging indictment.
I think if you look at what was happening in the waning days of the bankruptcy, in the lead up to the collapse, obviously what we're able to see now, getting to see like the documentary evidence from the trial and from just hearing other people's testimonies, up until the very last minute, he wouldn't let go of the company, even when he had admitted that there was this giant hole, that he had stolen customer money, that it wasn't there anymore, that he had lied to his own employees, let alone all of the investors and customers that were about to lose a massive amounts of money on his exchange. And he still thought, oh, I'll just go and raise more money and, cover up this crime with additional crimes. And I think that really showed that he completely lost touch with reality. Even up
he
into the very—
He continued to claim that his, quote, biggest mistake, in his own words, was declaring bankruptcy. As though anyone wishes to declare bankruptcy, when your liabilities exceed your assets, you're bankrupt. And so it's an interesting perspective on that.
Can you imagine someone like going into a bank and robbing it and say, don't worry, I'm going to make an incredible return on this investment? No, it's a crime. He stole money from people. He lied about it. It was a crime. It doesn't matter whether or not, at the end of the day, he would have been able to make that up or to make better investments or to sort of survive as a company. No one should be allowed to get away with that. And so I think it's absolutely the case.
Let me ask one more question about this before we move on and talk about other things, talk about innovation, talk about the space more generally. What were the lessons you think we learned from this? And part and parcel of that is probably the question about how some of the most sophisticated investors in Silicon Valley had invested in FTX and its various subsidiaries. What were the lessons learned? Have we gotten smarter about detecting this type of activity in the space?
I think there's a real lesson for Silicon Valley, to use that as sort of a metonym for the industry, where people really like the story of a single quirky visionary that can kind of transform and grow a business from nothing to a it's not tens of billions of dollar business in a very short period of time. And what we actually know about the greatest financial and technology companies in history is that they were built gradually. I mean, think about OpenAI right now. It feels like that invention came, suddenly, and it's now taken over everything. But that was a company that was built over many years, very carefully, very methodically over time. And that is how real invention occurs. It feels sudden, but the actual application is gradual. I think we all need to take a step back and be skeptical of any mega high growth business that in a matter of a couple of years is suddenly worth tens of billions of dollars, and instead think, is this really the case, or should we be backing people where they can create lasting, sound financial businesses with real fundamental value that they built carefully and methodically over time? And of course they're growing, but not in a way that's completely unsustainable and chaotic. And I think that the investor support of Sam, in spite of his personality, which was so clear through just being around him every day, is a cautionary tale there.
Yeah. Brett, let's zoom the camera out a little bit and talk about the post-FTX era that we find ourselves in today. Obviously, it's a buzzy moment. You can't go anywhere downtown without hearing people talk about a Bitcoin spot ETF. I mean, it's pretty astonishing. It seems to be back in the public consciousness in a very big way, the crypto space in general, and Bitcoin in particular. What's your 50,000-foot overview for where you think the space is right now?
Sure. Yeah. So I'll maybe answer that in two parts. It's kind of where I think we are now, and a little bit where we're heading, and kind of what I'm personally following. I think that there's this narrative about cryptocurrency that it hasn't reached its potential yet, and it's sort of this promise that never really materialized, and all of the the scams and frauds, like what happened with FTX and Celsius and Voyager and everything else, has really shown that it's not everything that it's promised to be. And I have a completely opposite view of it, which is that right now the cryptocurrency industry, if you just look at the market cap of the prices now, I mean, it's at current prices, the market cap of crypto is something like $1.5 trillion. That is about the same size as the entire Korean stock market. This is an industry that has come about in the matter of, 14 years. It has already, in many ways, achieved unbelievable institutional adoption. I actually think that if the only thing we get out of the entire cryptocurrency industry is Bitcoin and USDC, then it will have been worth it. And to have this instantaneous, decentralized, cheap, 24/7, no single sovereign country owned settlement layer for stores of value, I think is an unbelievably powerful invention that has already sort of achieved product market fit and will only continue to be adopted more by institutions everywhere. That's my view of where we are now. Then again, but at the same time, I think that there is an incredible amount to go from here, and I truly do believe it's going to grow unbelievably from here in a number of different ways. I'm following sort of four main aspects of that. The first is further financialization of the product. I think that the application of derivatives to any financial product, whether that's futures, I'm sure people have seen that CME futures and options in Bitcoin have now more open interest than Binance. So the kind of regulated derivatives applying to cryptocurrencies, and of course everyone is very excited about the potential for a spot ETF as well, as for another example of a derivative on Bitcoin. The second is the continued institutional application of cryptocurrencies, and by that I mean regulated banks, other financial institutions finding ways to integrate with whether that's stable coins or with Bitcoin or Ether in some sort of way, with the Ethereum network, bringing real world assets on chain. So different kinds of applications from institutions using digital assets. The third is the continued use of the decentralized peer-to-peer aspect of crypto. So basically the non-regulated part of cryptocurrencies, which I also think is incredibly important and powerful. And then finally, the kind of interesting sort of speculative technological use cases for crypto, whether that's decentralized social, decentralized physical networks, I mean, different kinds of potential applications, which I see as farther out. We haven't really seen those applications reach product market fit yet. But again, for me, even if those never hit the market, I would still be incredibly kind of proud and excited about all of the progress so far in the realm of digital currencies.
These are the sort of programmable money functionality, the Web3 functionality. Those are the types of things you're talking about.
Yeah, exactly.
And you think that's a little bit further out?
I do. I think obviously there are many companies in the space that are trying to put together applications on it, and I think that some have seen moderate success. I don't think any company has quite nailed it in terms of like the true. I don't know, like the Twitter of Web3 or something like that. I don't think we've quite hit that. But as for its financial applications, I think it's already shown its value and will continue to grow.
You used the phrase early on, settlement layer, thinking about it as an abstraction layer for the traditional financial services world. Obviously, manifold potential benefits to having a settlement layer. I think lots of folks in this room who remember the lessons of the 2007-2008 period, counterparty risk and absence of transparency, et cetera, et cetera. Talk a little bit about the settlement layer applications, how you see that unfolding, and where you think we are in that process.
Sure. So I think maybe two quick stories. I mean, one is throughout the crypto meltdown, DeFi lenders didn't go under, but many centralized lenders did. And why is that? And I think that is because the on-chain transparent aspect of sort of smart contract-based systems allows people to sort of fully see what is happening at all times. And I think that is very powerful for not just a market, but also for a settlement layer. The second is when you think about, sure, we think about aspects of the financial crisis, but I would say if you think about what happened with, Robinhood and GameStop, where you have a difference between when people are trying to put on positions and when those positions actually settle. We used to be in a T+3 stock settlement cycle. We went to T+2. Now we're going to T+1. The fact that we're not T+10 milliseconds doesn't make sense in the world of low latency, high frequency networks. It just we're at a place where technologically we can absolutely support it, and it's only sort of legacy technology, legacy systems, legacy financial institutions that's holding us back from a world of instantaneous settlement. And there's some issues with instantaneous settlement in certain areas of finance, but I think in general we can leapfrog existing systems by being able to use blockchain as this sort of always-on settlement layer that I think is incredibly powerful. And not just that, but if you're building multiple applications using this same layer, that they can compose with each other over time, as opposed to building like these individual settlement systems that are completely siloed and can't interact with each other at all.
Yeah, one of the interesting aspects of this space is just the enormous scope of the sort of philosophical and ideological framework that people bring to it. You have folks in the Bitcoin space particularly who are incredibly passionate about the idea of essentially divorcing the nation state and central bank component from the monetary system. People in the Ethereum space, you hear the words credible neutrality, you hear the word censorship resistance. You're talking about a very highly regulated type of environment when you're talking about traditional financial services and the settlement layer for those securities. Talk a little bit about how you see that aspect of the space, how you see that division.
I think that those ideas, the sort of the central ideas that underpin the original creation of Bitcoin and cryptocurrencies to be absolutely vital. And I think that they're vital not just for the creation of the product itself, but also for continuing to push for sound values. I think it should constantly be questioned, the relationship between sort of like, privacy and self-sovereignty, self-ownership, and the state. And I think that the most ardent supporters of cryptocurrencies who are pushing for these kinds of values are doing everyone a service. That being said, in order for any financial system to ever change, it has to be gradual. There's not going to suddenly overnight be a completely parallel system to the entire global financial system, and for that to grow either safely, soundly, or in a way that guarantees any real expansion. It has to be done in concert with the existing financial system. So,
particularly if you're a regulated entity.
Yes, but more so like there's a reason why people are excited about a spot ETF, and it's because, of course, in a sort of future world where everyone can kind of have a Bitcoin wallet and then buy Bitcoin and hold it in their the hardware wallet on their desk and use that as their investment, though that's great, but that's not the world we live in. We have people who have lots of money with regulated financial institutions that are managing that money for them, that are providing a service to help them invest, to help them grow yield over time, to help them transfer assets like within a company or between families. I mean, there's so many services that people provide on the investment side. The idea that we're going to throw all those out overnight doesn't really make sense. And instead, people want exposure to this asset, and doing so through regulated vehicles is very important. And I think that the growth of the capital markets side of cryptocurrency will ultimately help the kind of more like avant-garde, more true to the original Bitcoin mission, for example, companies be able to continue to develop on that front as well.
All right, I've got to ask you the question of the hour since we're in a room full of markets folks. We're talking about the ETF. Priced in or not priced in? What do you think?
Not entirely priced in, I think. And I'll say that for a couple of reasons. One, I think that there's still skepticism about whether this SEC will continue to try to delay and delay and delay. Although I think that probably we're going to see one early next year. I think the second is, where is the growth of derivatives past just a Bitcoin ETF? For example, are we going to see an Ether ETF? Are we going to see more movements on different kinds of digital asset securities in a post-Bitcoin ETF world? Are we going to see growth of cryptocurrency volumes as a result of this ETF? So I think there's some narrative that once there's for example, Bitcoin ETF, that's going to maybe stifle volumes in Bitcoin, because now if you want exposure to the asset, you can go into your brokerage account and buy an ETF instead. But I actually think it's going to cause spot cryptocurrency volumes to increase a lot for at least the reason that authorized participants who are going to be creating and redeeming this ETF are going to need to be trading the spot to be able to uphold their markets and be able to create the arbitrage between the spot and the ETF to keep it in line. And so I think it's going to grow. How much it's going to grow is also going to eventually dictate prices as well. So I think the whole event is not entirely priced in yet.
So let's talk a little bit about what you're doing now at Architect. I always find it interesting to see what people are doing and how they vote with their time. It's interesting. You obviously were involved in the HFT space. If you wanted to have left crypto, no one could have blamed you, I guess, after your time with SBF. What made you think that this was a space that you were passionate enough about to stay in, rather than just going back to, for example, the HFT prop shop space?
Sure. So I spent 12, 13 years in the traditional finance prop space. I was at Jane Street Capital for 8 years. I was at a high-frequency futures trading firm called Headlands Tech, which is one of the largest market makers on CME. And then I was at Citadel Securities for a year and a half, where I managed the options, ETF, ADR, and OTC market equity technology groups. So I've been in the world of sort of high-frequency, low-latency derivatives market making for a very long time now. And one of the things that struck me the most once I was on the exchange side of the business, getting to not just build technology for the firm I worked for, but to see all of the different clients and participants out there on the exchange and seeing what kind of technology they had, what struck me the most was that there's an unbelievable gap between the Jane Street, Citadels, Hudson Rivers, Virtus of the world, and pretty much everyone else. And there's a lot of reasons for that. I mean, these companies have like armies of software engineers that they built up technology over 10, 20 years. But I think it also has to do with the fact that people tend to build this technology in-house and then not share it at all. And I thought in the world of crypto, that's completely the opposite. I mean, people are constantly building in public. There's really an open source ethos mentality behind that work. Even direct competitors are investing in each other in various ways. So it's a much more collaborative, open technology environment than the traditional finance space has really ever been. And so that sort of inspired me to think, well, I'm a technologist, I'm a software engineer. I really want to build a company where we can create software and financial infrastructure and technology that can be reused by many kinds of clients and firms and investors, and not just for the choice few HFTs out there. And so we started in crypto because we thought, well, this is the place that has sort of the least mature financial infrastructure. The exchanges are the most difficult to sort of write to their protocols. DeFi itself is very complicated for your average institution to be able to participate in. And further, it's my belief that in order for the digital asset industry to grow, technology has to seamlessly support traditional and digital assets in the same platform. People are not going to be wanting to use like a different order management system for crypto than for their stocks or futures. And so kind of our goal over time is to actually encompass all of kind of existing assets, not just digital assets into one platform, but we thought digital assets was the right place to start.
Okay, so digital assets is the place you want to play. Again, finite amount of time. What were the problems that you saw at the top of the stack that you found most intriguing and most worthy of being worked on?
The first for us was very clearly the job of connecting to every exchange and providing robust, reliable, and low latency connectivity to all the different kinds of centralized crypto exchanges, in addition to normalizing all of the protocols to OTC market makers, which are huge in this space, people who you can trade with on a bilateral basis, usually via an RFQ system, and then also bridging DeFi into that as well. So trying to kind of put all of the different connectivity to different exchanges under one sort of central management system that makes it as easy as possible for people to trade.
So other than the fact that obviously you thought it made sense from a business perspective to get involved in solving those questions, what broader application for the space, what's the overarching thesis that you have about how this business can potentially broaden, deepen the markets?
I think over time, the line between what is a digital asset and what's a traditional asset will blur. I think we're going to see the growth of on-chain derivatives, of tokenized securities, of blockchain-based settlement systems. But those changes will only occur if the technology is ready at traditional brokerage houses and hedge funds and trading firms and investment managers and asset managers and family offices to be able to support that new world. I mean, you can imagine, like, if tomorrow we move to a blockchain-based settlement for US equities, would any firm in the United States be ready for that transition? I think the answer is no. It's going to take a while for us to get anywhere close to that, but I think our goal is we can build technology that will basically enable that revolution to happen if it does.
So if we find ourselves back at the 2033 Benzinga Financial Conference, is it your thesis that we will be talking about how Architect and similar shops are settling traditional capital markets trades on their rails?
Yeah, I hope so. I think that we'll hopefully be, assuming we're around in 10 years, I think we'll be engaging in a large part of the ecosystem and the vertical stack from the top to bottom, whether that's the pre-trade analytics of data that's a mix of on-chain and off-chain, whether that's the execution of trades on-chain, whether that is the sort of the settlement layer and us being able to integrate seamlessly between kind of traditional capital market structures and on-chain capital market structures. I expect that we'll be talking a lot about this. That's one possibility. The other possibility is that, assuming in a world where blockchain grows, it's so integrated deep into the system that we don't even talk about it. In a way that, like, the fundamental protocols of the internet are something that are always there, HTTP, SSL, these kinds of things that are there every single day. They're the thing that you are using when you're texting on your phone and using your banking app, but we never talk about them because they just work all the time and they're just a fundamental part of the ethos. So I think that, that could be the other possibility, and we've moved on to the next great thing.
What's your sense of the time horizon? How long do you think it takes to get there?
5 to 20 years.
5 to 20, that's a wide spread.
Yeah, I think that because you're going to see different amounts of application grow in that time. I think technological change, especially in finance, takes a very, very, very long time. Anyone know when the CME was founded? 1898. And it took them until the 70s before they built sort of like the electronic version of like the exchange that we know today. But CME as itself is a many decades old institution, and we are largely using the same exact futures trading and clearing system that was used then, of course, with lots of sort of inventions to make things faster and more robust and lower latency. But these things take a really long time because they're the fundamental fabric of our financial system, and they should take a long time. Things are not going to change overnight. So I think we should all be a little more patient on that.
Yeah, Brett, we got the 2-minute warning here to start wrapping up. Let me ask you this. We talked about Benzinga 2033, Benzinga 2024 conference. What are we going to be talking about? What are you going to be looking at over the next year?
I hope that maybe taking this full circle to the beginning of this discussion, I hope that the end of the kind of FTX tragedy marks sort of a new stage where we are focusing on businesses, investors, founders that want to bring real value and experience to the financial system. And so when we come here a year later, we're not reflecting on tragedy. We're talking about all of the advance that's occurred between now and then.
It's an optimistic take. Brett Harrison, thank you so much.
Thank you.
Thank you, everybody.